Hello, investors and traders, and welcome to the Midweek Report. I'm AJ Monte, Chief Market Strategist with Sticky Trades. And before we get into the technical analysis of this very interesting day, I'd like to make a quick announcement. Today is Wednesday, and from 6 to 7 p.m. Eastern Time, I'm going through my rapid fire 1 hour session with our members, where usually I go through 50 to 60 stocks in that 1 hour, and we're hitting targets left and right. Let me give you an example of what this looks like. And we have a very important change that we're making tonight, so stand by for that. This is a list of the star favorites that came out last week. And you can see our members are listed. Tommy from New York, Mike, Pat, John, Johnny, Linda, Steve, you name it, they're in there. And if their stock that they submit to us hits a good number of the signals on my 7-point trading checklist, it gets labeled as a star, and then we carry on over to the next week. You can see here that I have some double stars here. This is a long-term star favorite. You can see Eric and Kelly had a double star favorite. Rick had a double star favorite on DVN. Daisy and Renee here had double star favorites as well. Now, what does that mean? What I have here is if you see the cell covered in blue, that means that the price target for that particular stock has been hit. And I have not gone through the entire list as of today, and I think there's going to be a lot more blue hitting those targets. But as of now, we have more than half of those price targets are already hit. And so those targets are reached, and that is only the first week. I'm just showing you the accuracy because a lot of times people think, oh, you're only playing it from the downside. No, these are ticker symbols that are brought to me from the audience. The audience is not necessarily bearish or bullish at any one time. It's a mix. So we have upside targets, downside targets in that mix. And then what I do is I put the price targets using my target lines like I do on the weekly market report and the midweek report, and those targets do hit. So if you're interested in becoming part of the Sticky Trades, especially the rapid fire stock analysis session, then go ahead to our website, stickytrades.com. There's an automated operator on the bottom left side of the screen. And all you have to do, you're not actually talking to a person, you're talking to a computer. Just say, I'm interested in the rapid fire session, and we can go from there. So let's go to the charts. If you look at the DIA, this is the weekly chart, and I found something to be very, very interesting. See these vertical lines? When I pulled up the 3-year weekly chart, I was looking for a cycle high. Now, normally, if you're measuring cycles, you do that at cycle lows. That goes back to Stan Ehrlich's Cycle Finder back in the 80s when I used to use that. It was a very mechanical device, and you're looking for cycle lows generally. This one I used to measure the cycle highs, and you can see that we hit that cycle high very close to the date that we have here today, December 20th. This line was drawn December 12th, and we hit that cycle high shortly thereafter. And what happened? It sold off. Next cycle, look at that. There we go. That's December 11th. We hit that cycle high precisely to the penny. And then what happened after that? Well, look what's happening today. Very interesting. Last week's candle, that green candle right there, fell exactly on that cycle line. And now we have red showing up with a pretty dramatic day today, almost down 500 points in the Dow, giving back nearly everything that we gained in Fed speak when everyone was talking about 3 rate cuts in 2024. So we're giving them that back, and we are in the process of forming the pivot. Now, I know I'm taking a lot of time on this one chart, but this is a weekly chart, like I said. Watch what happens when I switch to the daily chart. Now, this was purely by coincidence because remember, I started looking at the weekly cycle on the highs. But as we see right here, we flip to the daily chart. Look at that. On that cycle, we sold off. Right to the day on that cycle, we sold off. 2 or 3 days prior to this high right here, we hit that cycle line and then sold off. And then what happened right here? Precisely on that cycle line, we sold off. Now, I'm not going to say we're on the cycle line because we're not for the daily chart, but we are forming a pivot point. Today was a half signal. Tomorrow, I think we're going to have a full-fledged pivot. So my downside targets right there are still in place at 365.10. Now that I've showed you the cycle lines, I'm going to erase those cycle lines, and then I'm going to start over in another cycle sometime next month. So I'm still keeping that downside target again at 365.10. Stand by tomorrow. Could be a very interesting day. Now, if we look at IWM, what's happening? We are moving down towards my target of 192.94. I said this last week. I think we're back into a winning streak in with the rhythm of the market, so to speak. So I think that downside target will hit possibly tomorrow, but most definitely by Friday. I feel, that's my opinion based on this chart, that we will hit that downside target right there at 192.94. So stand by, you bears out there and you spread traders that have those put spreads on. Now, if I look at QQQ, interesting thing happened here. I had a two-part from week to week. Said we would go up. We hit that target. We're now moving down towards my downside target on the Qs of 397.82. Look down below. We're almost at a sell signal on the stochastic, but we have a very well-pronounced sell signal on the CCI. It's generally the rule. For the most part, the CCI will lead on those signals before the stochastic does. So we got the sell signal on the stochastic. Remember, I forecasted last Friday we would see a drop in volume. Let me magnify this for you. Look at that. We got the drop in volume right on this green high from yesterday. Now what? We're forming this pivot on the way down, looking more bearish on the short term. I feel very comfortable about that downside target of 397.82. Now let's look at SPY. Moving right along, we have a half signal again, but a big red candle. I'm keeping that downside target in place at 450.18. It's not going to happen by Friday. It may not happen by New Year's Day or thereafter. But you have to understand that many people have misinterpreted the Santa Claus rally. What we've seen since October is not the Santa Claus rally. That's pumping in money into the market. The Santa Claus rally may actually fail. Go to Investopedia and you'll see that the Santa Claus rally is the last 5 days of the year, which starts on Friday, goes throughout next week because we have a shortened trading week. That's the 5 days right there. Then we have the first 2 trading days of the new year, which is going to be Tuesday the 2nd and Wednesday, January 3rd. That would comprise the Santa Claus or the year-end rally. If we don't get that, historically, again, look at your history, if we don't get that Santa Claus rally, we could be in for a pretty severe sell-off in January. So stay tuned for that. Downside target again is 450.18. Oscillate is crossing down here on the C side with a sell signal. We're about to cross with a sell signal on the stochastic. Now let's look at the VIX. A very significant trade printed today here with the VIX now closing significantly above that 20-period moving average. That's the first close over that moving average since back here when we had that in October. So this is looking very bullish for the VIX, very bearish for the S&P, because remember, for the most part, they're inversely related. I'm not moving that target. I matched that up with my target line here. That green dotted line represents the target of $18.11. Now, hopefully, you all caught me on X, formerly known as Twitter, this afternoon. Before I actually put the trade in, as I usually do, I give the public a chance to trade ahead of me. I pulled up this chart. I posted it out. It was looking like a doji. There was a drop in volume, wide divergence from the moving average. This is SLV, by the way. I'm highlighting this for those that maybe missed it. And what happened? Well, I sold out of 5% of my position because of those signals. And if you look at SLV today, it didn't close with a doji. It closed below that 20-period moving average. So I'm very happy I sold out of at least 5. Those of you who are following me on X, hopefully you got in there if you're actually trading any money. If not, ghost along, paper trade, have fun. Learn how to read the charts. Stick with us at Sticky Trades. We won't steer you astray. We'll teach you about how to trade options, teach you how to read the charts, teach you how to manage risk. And here's the best part. Tonight, we're adding a feature to my forecasting. If I put an upside target or a downside target, I'm also going to be explaining and identifying support and resistance levels for those of you who use stop loss orders and follow the 1% rule. So it's an added feature to the rapid fire session tonight. You don't want to miss it from 6 to 7. See us at Sticky Trades, sign up, and I'll see you on the next webinar. Take care.